user-friendly. Now, we have a lot of colleagues from our media and publications who have some questions for you. So is it all right for them to ask you a couple of questions, Mr. Pavel?
It's my pleasure. Absolutely.
Right.
Thank you.
Thank you very much. Now we have our first question coming from Dindi Sundian from Philstar.com.
Hello, Mr. Pavel. My question is, what principles guide Salmon in designing new financial products to develop?
That's a good question, right? I mean, we look at combination of factors, right? We look at the first, the objective needs of the market and of filling the customers. I mean, at the end of the day, we are very retail-focused bank, right? So where we believe greatest difference exists is in essentially efficiency of the digital distribution channel, right? So what I mean by this is as follows, right? For example, if you're a big bank, you're building a branch, you're processing paperwork, okay? So sometimes, I mean, they say, okay, listen, this loan is less than, say, 50,000 pesos. We're not going to give out loans at less than 50,000 pesos because it's not worth our time. Now, the online, the digital approach actually changes this, right? Where we really have the edge is because of digital distribution and because of our digital center platform. It doesn't matter for us what the size of the transaction, what the size of a client is. Right? We can work with everyone. We can embrace every single client because for us, there is zero incremental cost to onboarding a particular client. So this is what internet really has done to our lives, and this is what it's doing to, online channels. We're doing to financial services. We don't no longer care if a client is small enough or not important enough for a big bank. We can embrace everyone in this market, and that's what's really changing what we can offer. We believe that the greatest segment that has been really neglected has been credit, consumer credit. So that's why we started with this, right? Because if you look at stats, I mean, unsecured consumer lending to GDP in the Philippines is something like 7%. Put things in perspective, in Vietnam, it's 50 to 60%. And why is this? Right? Because the credit market infrastructure is in better shape. The smaller players have no, so the market was active in many more respects, but there is a real, incredible white space to cover in unsecured consumer lending. And for us, this is a big focus, and we believe that we can really change how things are being done in terms of credit provisioning for customers, right? So we've done this for call it top 30 million, right? And for us, the focus area is top 30, top 40 million people in terms of the income pyramid in the country, right? And so that goes actually much deeper than what traditional banks actually serve. So that's where we believe the edge is, and that's what we're focused on. And the same will apply for SMEs, right? We'll focus on micro companies, we'll focus on micro enterprises that really have not been well served by the legacy banking system.
Thank you very much. A round of applause for Dindi Sundian from Philstar.com and Mr. Pavel. Now we have another question from our colleagues from the media, Jinji Kiambao from Newsbites PH.
Hi, I'd just like to ask, you mentioned earlier that Salmon is cloud native and AI powered, it's designed for the people. So can you talk about the security features of the product, and how do you maintain the balance between automation and human centricity? Thank you.
Yeah, that's a great question. I think let's talk about the security features first. Right? For example, you have our cards, okay? In our cards, I actually have seen, myself, many of my Filipino friends, they put like special stickers on their credit cards before they use them in restaurants. Because they're afraid people write down the numbers and the CVC code, right? And that's a joke. I'm feeling very secure giving our card in the restaurants because it has no numbers. Okay, the numbers are substituted with asterisks, funky numbers. So you have QR code that we use to essentially tie that particular card to your credit line, right? So it's essentially super secure experience. Nobody can steal a number, right? You can look up your number yourself in the mobile application, but nobody can actually steal it. And that makes it very, very different and unique proposition in the market. The same with application. right? We use lots of tools to essentially prevent people stealing your money, right? So you can freeze any of your cards at any point of time. You can essentially just stop any withdrawals from credit line. If you feel your card was compromised in any way, I mean, that's it. If, we use all the authentication that's basically used in any other secure app, right? So it's basically Face ID to get into our mobile application, right? I mean, you need to have a special secure code, Face ID, boom, you're in. And that actually allows us to make sure that all the traditional risks that you would usually have are essentially covered, right? You're always being informed about every transaction, et cetera, et cetera, et cetera. And security features are being rolled out as we speak, but as I said, we haven't had a single incident of a break-in. We have been providing incredible uptime. We have been providing incredible payment success rate to our customers. And we are, I don't want to say that we have like, I don't know if you say the best or the worst cybersecurity hackers on our team, in a good sense, right? So we have the best cybersecurity team probably assembled across Southeast Asia. So we're very, very secure about sort of people's money. That's critical, and I think that's the foundation of any bank. For the bank also, to parallel what we did, we created, and Rafi will talk about this, what you can do on the deposit side, but we created the system which allows, again, to have a very secure guardrails in place for people to take your money from the bank account, right? So it's incredibly robust. Now, I think the second part of the question which relates to, okay, how do you balance the human approach and the AI-centric approach? That's a great one, right? Because that fusion, I think very few people get right? What we do, we believe that we are incredibly good in fusing human touch and physical presence with AI tools, okay? What I mean by this is that many people that are like AI-centered, AI-powered, they just go pure online and they just stay there. As a distant bot to which you can chat, and that actually creates distance between them and the client. And what don't believe in this? We said we want to have an immediate client contact. That's why we rolled out this network of local points of presence. That's why we're present in 5,000 locations across the nation. That's why our customer service, for example, is also human-powered, but it's assisted by AI in the back end, right? So when the person talks, right? So what we have in parallel AI running. This is like semantic analysis of the conversation, and essentially helping our people to drive the conversation the right way. Sometimes AI steps in, but at no point the client or yourself feel that this is you're chatting with a bot. For example, we have lots of sales agents, sales ambassadors that are humans, but we use AI to train them, right? So our people that are working in every particular store, they have their training sessions when they have their time, just press 2 buttons, and they have like a sparring partner that pretends, AI sparring partner, that pretends that he is a very difficult client. And they have to get through to the sale with him. So we use lots of training tools, essentially supporting humans in building a very human contact with our clients, without ever really creating the separation bridge between the cold machine and the real client.
Thank you very much, Mr. Pavel Fedorov. Another round of applause for that question. Now, last but not least, we have Compi Manalo from the Daily Chronicle.
Hi, good afternoon. With your experience in major global markets, what makes the Philippines unique in creating a fintech ecosystem outward? And follow-up question on that is, why did you choose the Philippines in your first foray in the banking services? And final question is, the PSP has loosened its rules in digital banking and will expand the number of digital banks from 6 to 10. Do you have any plan to apply for a digital banking services? You're already offering digital banking services.
Thank you. That's a great question. I wish I could just simply answer because we love it, because we really do, because we love the Philippines, and that's why we started, right? And obviously, we're in love with the country, but I think on the top of this, when we're choosing the market in which we start, we actually have done tremendous analysis, top-down analysis, looking at the various metrics that would drive our choice. And I have to tell you that even on like leaving aside the subjective affinity, right, and sort of loving sort of the customer that we see here, I think the objective metrics of the Philippines, I think this is what should be well understood, and I think, you know, with a fresh pair of eyes, sometimes you see it better than sort of somebody who's been in the market for many, many years. The Philippines is a very unique market by any global metric, right? So think of this. You have an extremely mobile native population. This is the ultimate social media capital of the world. You know, a meeting with a friend hasn't happened in the Philippines if it hasn't been posted on Facebook, okay? I mean, that's an incredible, I mean, the penetration, the time spent, average time spent on a mobile phone in the Philippines is probably top 5 globally, okay? The penetration of Facebook, penetration of key social media, so it's really up there, right, in terms of the any global metrics. On the other hand, when you look at the metrics of development of the financial system and say, okay, what is the App Store rating of top 3 banks in the Philippines? I mean, you'll find out that this is 1.4 to 3, right, at best. What is the penetration of credit in the country? As I said again, it's 6-8% of GDP. So on one hand, you have population and clients that are ready to use mobile as a core medium of communicating. But on the other hand, you have the industry that really was not up to now, was not able to deliver solutions that would satisfy their needs. Look at Indonesia. Indonesia actually is a very structurally similar market to the Philippines when it comes to structural economy. I mean, just slight difference in GDP per capita, but it's actually a very, very similar country. The best retail banks, legacy banks, there, they have their apps rated at 4.8, 5. Like Mandiri, right? I mean, others. I mean, those people have really invested tens of billions of dollars into building top-notch businesses, right? And that's very different, right? I mean, for one reason or another, right? And we can discuss what the reasons are, right? I think great market infrastructure, I think, is one thing, right? I mean, for example, I mean, one distinguishing feature of the Philippines was that historically you used to have many different forms of personal identification. So this created this vicious cycle, right, where you really could not pin down a person. I mean, if he's fake or if he's not fake, right? I mean, you could go to a bank, you could use any of their 20 forms of ID to try to open a bank account to get a credit. So this created lots of fake identities in the system, and the big banks have really closed up the loop and have really said, okay, we want to serve this group of top 5, top 7 million people in the country, and the rest we really don't know what's going behind that fence. I think there are many reasons why this has happened, but the objective reality is it's a market where you probably have the widest gap between the preparedness of the clients, retail clients particularly, and preparedness of service providers, which are the banks. So that gap is very wide. And the way I look at this is that, I mean, the overall, the financial services industry in the Philippines today would capitalize probably $50 billion all in. I mean, all market cap of all the banks, all of fintechs, is $50 billion, probably will be whatever, 70, 80 in 5 years' time. I think fintechs, challengers, will be worth a good quarter, if not third, of this number, right? That's where there is a real headway to be made, and I think that's where the real opportunity lies, because people really want top quality service.
Thank you very much. A round of applause again to Mr. Pavel Fedorov. You may now take